The reason most franchises are successful is because we're not trying and figuring anything out. We're buying into what's already been figured out, and then we're just executing and moving toward profitability.
Ladies and gentlemen, welcome to Real Estate Investor MBA. My name is Tejas Gosai, and I've had the honor of helping hundreds of investors achieve the American dream by creating generational wealth through real estate. I've spent the past few years interviewing the most knowledgeable experts I could find in the business to cut your learning time and conquer the hardest subjects in the game. Check out rei.mba, which my team and I have packed with over 75 interviews and free access to our real estate roadmap, webinars, and publications. If you're listening, I am rooting for you, and you're already on your way to financial freedom. Cheers and happy hunting. Today, we are talking about franchises. Why, Tejas, would you have a program about franchises? Well, I work with a lot of high net worth individuals. I manage a private equity fund. I've been developing hotels for years. I share a lot on LinkedIn about this. But whether you're a new investor in real estate or a seasoned investor, franchising combines both real estate and business to give you a playbook so that you can run a successful business, generate a bunch of revenue, own or lease the real estate. You still need real estate for the business, and take advantage of a bunch of tax benefits while potentially maintaining your full-time job and eventually leaving your full-time job, right? We all want financial wealth and health and financial freedom. And that's one of the goals of this program. So we have Kim Daly today, and she is a famous person in franchising. I'll tell you about her bio, but very energetic and very knowledgeable on the topic. So a little bit about Kim. For the past 20 years, Kim has been helping entrepreneurs and investors take control of their lives and step out of the corporate cycle by investing intelligently in the franchise businesses and becoming franchise-preneurs. She is an international best-selling co-author of Franchising Freedom and the founder and host of the Kim Daly TV YouTube channel. Before becoming a franchise consultant, Kim was an entrepreneur and highly sought-after consultant in the health and fitness industry, working with brands such as Denise Austin, Dr. Dennis Waitley, Gold's Gym, and eDiets.com. She is the creator of the Daly Plan, a millionaire mindset coaching program that enables her to build the largest franchise consulting business in the history of franchise consulting in 2012. She aspires to be the most influential and motivational voice in the franchise industry. Kim is a mom of 2 teenage boys. She is passionate about fitness and nutrition, and she lives on the beach in southern New Hampshire, where she loves to ski in the winter and work out year-round. Super motivational person, has her act together, and is passionate about the subject. I hope you enjoy the interview. Check out our website. Cheers. All right, we're here with Kim Daly. I said it right?
You said it right.
And you are the franchise guru. I'm going to act like I never read your bio, and we're going to have some fun talking about something that deals with real estate, but a little bit different. So, Kim, welcome.
Thank you so much, Tejas. I'm excited to be here.
Definitely. Let's get into the, I never met you. What do you do? Who are you?
So I'm a franchise consultant, which means I help people invest in franchise businesses. Most people don't know that what I do even exists. But then when they learn about what I do, if they're interested in business or diversification in their portfolio, they're like, wow, this is a great service.
Yep. And franchises have been around for a really long time. I work with a lot of high net worth individuals, and my foray into the real estate world was working with doctors who wanted hotels specifically for real estate. And obviously, having a Best Western or a different flag was the franchise. So that's why we're having Kim on the show. Let's get right into it. So what franchises, who calls you and says, I want a franchise?
So many different people are, I think, I'm very, very biased, but toward, the benefits of owning a franchise business. But it's two kind of different groups of people. So one would be like people in career transition or people who have a great corporate career, but they're looking for more freedom and control and stability for their financial future. And so they're looking for diversification just from being a W-2 employee. But then it's also the investor mindset. So people who have a lot of assets in real estate, and a lot of times they have a lot of equity, but not necessarily cash flow up front. And they come looking at franchising as an opportunity to diversify their cash flow, to put a little bit of time and energy into something else, to continue building equity, create more tax advantage. But ultimately, it's always about the cash flow.
Yeah, definitely. You said the best word in real estate, tax advantage.
Yes.
And, folks that have a career, I work with a lot of doctors and lawyers and engineers that like systems, and franchising, the world is a system. You're adapting the system of the franchisor, franchisee. What are some of the businesses though that, make sense for somebody? Just for an example, I don't want to own a laundromat, but it might make sense to own 30 laundromats with a franchise. And, restaurants, or can you share some of that?
Yeah, so there's so many different types of franchises. Franchises cover, I think, 80 different industries. And at any one time, there are more than 3,000 or 4,000 businesses out there being sold as franchises. So, the question is like, how do you even know where to begin? It's a super daunting task to figure out. And that's why I have a business. So when people come to me and say, Kim, I'm interested in learning about franchising, first of all, my services are free. So there's that. I get paid by franchisors like a recruiter, right? So my job is to get to know you, the candidate, understand really what your goals are. Because a lot of times when people come to me, they're super focused on what the business does. But when you work with me, we're going to move our eyes off of what the business does, and we're going to focus on what is the business creating. So I'm infinitely more interested in your goals. Like, what are you looking to build in your life 3 years, 5 years, 10 years from now? And how do you want this business to help you get from here to there? Is it all of it? Is it a part of it? Right? So once I can understand where somebody wants to go personally, professionally, and financially, and what time, then I can align my knowledge, 20 years of relationships and understanding of franchising, to their goals. So when you invest in a franchise, Tejas, what you're really doing is you're buying a partnership. So you're buying down the learning curve of starting a business because you're partnering yourself with people who've already figured out a way to make money, right? You're buying their proven infrastructure, their marketing, training, technology, ongoing support. This idea that you're in business for yourself, but not by yourself, right? And that leverage allows owners to come in working on their business rather than in their business. So we don't have to be full-time as franchisees. So it's a long worded way of saying there are many different types of franchises out there. If you're out there trying to figure out what is the right type of an investment, oftentimes people fall into the all too common trap of, looking at what they know, or thinking about what their community needs and thinking, oh, well, I should bring a UPS store to my, but a UPS store doesn't match what you want to do as an owner and the income potential that you want to get to. Then it doesn't really matter if your community needs it. It's not the right investment for you.
Yeah, you don't want to lose your mind.
You're going to lose your mind. Yes. And I'm not the consultant for food. That's the other thing. I'll shut up. So people, you will have to beg me to bring you food. And you want to know why? You got to get to know me. But there are just faster, easier, better ways to make money. I can prove to you all day long in comparing financial models that you do not want food. People want predictable, scalable revenue. They want low fixed costs and big, fat, healthy margins. They want small teams of people. They want quality of life. Those are the characteristics of 99% of the people I work with. And those are not the characteristics of investing in food.
I love it. I love it. Yeah, no, thank you. Praise the Lord. And the losing your, just headaches part of it, as somebody who grew up with in the hotel business and, dealing with some of the headaches.
Yeah.
Let's just say I am a doctor or somebody. What is a franchise that makes sense for me? And I also think it's going to be real estate related, right? Some of these folks are probably going to have to buy land or develop something. Can you give me something that makes sense for them?
I love that. So the first thing I'll say is most franchisors don't actually want you to own the real estate unless you have a very significant net worth where you can comfortably afford both investments, the investment of the building and the business, right? Because they're two separate investments with two separate returns, as you know. But most of the time, the franchisor would say, look, put your money into the business, get this thing up and positively cash flowing, maybe work into your lease with your landlord that you'll buy him or her out over time, but make sure that this is even something you want to do. And oftentimes, Tejas, what people might find is that if they look at doing 5 locations without owning the real estate, the cash flow that they would build and the equity that they would build to sell the business in 7 or 10 years would be greater than if they owned both the building and the business. But it comes down to everybody's individual net worth, cash flow situation, and then again, what you're trying to create. I mean, the Ray Kroc theory of franchising, right? Ray Kroc being the founder of McDonald's would say that he was never in the hamburger business. He was always in the real estate business, right? But he first had to be in the hamburger business to then own the real estate, to then sell the hamburger business and then be the landlord to the hamburger business.
Right.
Yeah.
Brilliant. Love that. Love that. I mean, the real estate part of it too is negotiating that commercial lease, which is really that's the backbone of where your business is going to go.
It is.
And we have a couple podcasts about that, what like a net lease is, a gross lease and stuff like that. So very cool. Where do you work? What parts of the country? Where?
I love it. So I'm contracted by franchisors for US growth. I have friends in Canada. So if somebody's listening from Canada and you're interested in our free service, I can absolutely refer you up to my crazy Canadian friends up in Canada. I just don't know. I don't have enough knowledge of what franchisors work, right? Because franchising is very territory and geographic specific. Not every business works in every market. And so I'm contracted for US growth, but I have no territory restrictions. So if you're in, Massachusetts or California or anywhere in between, I can help you explore franchising.
So could you give me some places that you've been working with clients and, helping them get a franchise off the ground? Can you mention a franchise or mention?
Oh, sure. Yeah, no, specific brands. I mean, I work with big brands you may know like Supercuts or Meineke Automotive. And I work a lot with emerging brands where these are the next up and coming brands where people would have that first to market advantage. So one of the things I do, Tejas, is when I meet a candidate and we're measuring your risk tolerance and sort of figuring out, again, what you're trying to create, I explain to people that, coming in on the pioneering side, like imagine if you were one of the first investors in Planet Fitness or Massage Envy, right? These are two giant brands that the pioneering franchise owners scooped up the Dallases and the Atlantas and the Charlotte, North Carolinas, the best territories in the market. And when the world wakes up 7 or 10 years later and everybody that's coming into your business wants they're like, this is the greatest thing. I want to own one.
Yeah.
And there's
Chick-fil-A.
And there's no more territory left to buy. That's when those pioneering franchise owners have their greatest exit strategy moment. I saw Planet Fitness franchisees cashing out for 6, 7, even 8 multiples of clubs that were netting them $1 million, right? So it's not that Planet Fitness is going to hold on to that multiple, but it's all based on the brand equity at one moment in time. And that's one of the biggest advantages to investing in a powerful franchise engine where the franchisor has the vision and maybe a track record from building other brands, but to build the next big American thing. And when you come in at the beginning as a pioneer, then you can exit when it's big and let somebody else take it from there to the next level. So again, when I'm working with people, it really depends on what they're trying to create and their risk tolerance, because not everybody is comfortable for that level of risk. Because look, if you're pioneering, then that means that there's no track record, right? Then that means that there's not a lot of validation out there, which are, some of the biggest advantages to investing in a franchise. If you're looking at something like Supercuts that already has 3,000 locations, well, there's a lot of people that can validate that story, give you comfort that the I's are dotted and the T's are crossed and the business can be, X profitable. If you're pioneering, the I's aren't dotted yet, right? You're going to be part of dotting those I's.
You're definitely taking some risk and trying to hit the gold rush. Great little tidbit. I have a friend who got in early with Applebee's, and it was my father's friend. And he was like, I remember they called him in. My dad's a doctor, and it was like, this guy wants to invest in this crazy restaurant. That guy was also a doctor and was not a doctor very long after he
Not
got
anymore.
into Applebee's. Yeah. He had like
Yeah.
50 locations at one point. It was just
Wow.
wild. Yeah.
Right. I do meet a lot of professionals who are highly skilled and trained to be doctors or nurse anesthetists or surgeons, plastic surgeons. And then they get there and they realize that they're trading their time for money. And then they're looking for something to where they're not trading time for money. And there are franchise businesses, like you mentioned, a laundromat. There are franchises in laundromat. There are franchise businesses that almost feel like a real estate play because they are very minimal time commitment, like a laundromat. So a laundromat's going to be a really big capital investment, right? About $1 million to build it out and get all your washers and dryers in there, but a very, very minimal time commitment, right? Maybe 5 hours a week or less. And so it's highly scalable, even by somebody who has a big W-2 job, like a doctor or a surgeon. So you have this opportunity to build and scale this revenue that doesn't require your time, that over time can replace your big W-2 job. Again, along the way, creating tax advantages and then having that long-term sustainable cash flow that you get to control.
I'm happy you mentioned laundromats again. I have a client who owns like 6 or 7, and it's wonderful, fully automated, cashless. You walk inside, there's no issues. You obviously finance that $1 million worth of equipment over
Sure.
a long period of time. Another good one for me, I have a lot of gas station owners and buyers and sellers I've worked with, BP and Amoco. Oh, no, that's not allowed anymore, but yeah, so it's neat to see the changes that take place, and also like the rebranding of some of these gas stations and some of these different places where even like the hotel side, I'll just give you a quick example. You get a Hilton and you build it, let it run its course, and then it goes into a different brand. It becomes a Best Western, which has lower franchise fees and all that stuff. And then it might be Quality Inn, and it kind of takes its way down, but it's super profitable the whole entire time. And then, like you mentioned, you have a different real estate partner, right? You have a different franchisor that you're keeping the model going with. You mentioned scalability too. So I that's why I was talking about this. Buying one hotel is great, but replicating it and owning 10,
Right.
same thing with a laundromat. So you've worked with clients and I'm sure they've expanded. Can you talk about the time and
Yeah.
how long all this takes if I wanted to do this?
Right. So the wealth is always created through scale, just like it's not about one apartment, or one, rooftop. It's about how many, leveraging your time across multiples. The same thing will be true in franchising. So if you're like, okay, one location of a business can gross $500,000 and net me 150 grand, then I want to own 5 of them. So the reality is you could build all 5 in 1 year, or there may be a development agreement that says, maximum you have 5 years to build out all 5 stores, but that's highly individual per you and the franchisor. Look, the franchisor wants fewer franchisees that have bigger businesses. It's fewer people for them to manage and coach, but also bigger business owners are typically happier business owners, and they're not hyper focused on the success of one location. They're sort of looking at, the collective whole of all 5 locations creating an outcome. And the reality is, Tejas, when you have more than one location, you might get, 2 or 3 that are super performers and 2 or 3 that kind of get, take a little bit longer. They limp along, or they end up getting carried by the other 3 until they kind of get there. But that's, again, where in any portfolio, the more diversified you are, the safer the whole thing. So franchisors know this. And so it's part of why they use consultants, because they know that I'm going to attract people that have that empire building mentality where they can award 3 units or 3 territories or 5 or more to one candidate, and then create a development agreement on which we all agree we can get these open, because nobody's making any money until you get them open. But you don't want to rush and get, have pressure to get number 2 open if number 1 is taking a long time, or there's a once in a lifetime pandemic, or things like that happen. That this is where that relationship supersedes the legal documentation. And really, ultimately, that's what we're buying. We're buying that culture of being in business for ourselves, but not by ourselves. And we're trying to find people that we can be coached by, mentored by, inspired by. We buy into their vision. They have a vision for how they want to bring a brand to market, how they want to bring a product or service to market. And as franchisees, it's not our job to change that or question it too hard. It's our job to buy into these people are the experts. They know how to do it. I'm just going to tag along and go execute on that plan and get to the part where I can start making money. Because it's that trial and error period of figuring out a business. That's where most businesses fail. And the reason most franchises are successful is because we're not trying and figuring anything out. We're buying into what's already been figured out, and then we're just executing and moving toward profitability.
Love your explanations. You're very eloquent. I remember a big thing in the contracts was the AOP, area protection, and trying to negotiate that with the franchise. And in line with what you've been saying the whole time, and we're talking about, if you are going to get committed to this too, you get that negotiation period, you want to try to get a bigger space and then open up your next franchise and things like that. It was just really big. I remember how many fights there were about that because other people have an area of protection, and that franchisor, has that territory, and you want to build one here. And
right. But over time, this is what happens. We franchisees definitely get territorial. But from the franchisor's perspective, they may initially divide up a market based on, awarding a fairly large territory. And then as they become more experienced and they see that in these larger territories, the bulk of the business is coming from one part of it, that they could actually create more markets if they had smaller markets. And that's where the franchisor may come in and try to renegotiate the territory. And really, it's not to your detriment. It's to the advantage of the franchise, because if we can have more franchisees building businesses side by side by side, then the whole brand has more value in the community. And so if a franchisor, there's so many myths and there's so much negative energy, I think, surrounding franchising, because these types of conversations get spun out by people that feel like they were taken advantage of by their franchisor. And I'm not putting down anybody who's ever felt like their franchisor did not act in their best interest. But what we have to sort of zoom out and remember that the franchisor, if they are in it, if they're a good franchisor, and not all franchisors are created equal, that's why I don't work with all of them, but the ones who are in it for your success, if they're coming in and trying to renegotiate, or they believe that now that they've developed the market, they can squeeze a couple more locations in, it's not because they're going to try to cannibalize your store or hurt your opportunity. It's because they feel like there's more that business that they can be had in the market with more locations, which again, typically makes everybody more successful, right? When you start driving around a community and you're like, wow, if you only see 2 or 3 in a market like Dallas, you don't even blink an eye.
right.
When you're driving around and you see 15 or 20, you're like, what is this thing? I see it everywhere.
Yeah.
And that brand recognition is what we as consumers like. This is why we like franchises as consumers. But so on the flip side of that, as franchise owners, we have to understand that we need the company to keep growing and saturating the market, because that's what creates that brand equity, that brand awareness, where we all do better.
Thank you. And you want to build more of your franchise. When you make the commitment, you're like, all right, I'm going to put another laundromat next to this one because I want to be the owner of that area's laundromat.
Exactly. And you don't want your place to be so full that people are leaving and then going somewhere else.
Right.
Like I once knew a Hand in Stone, which is a massage business owner, who he picked a location that the franchisor was a smaller footprint. Like I think typically they like 12 to 14 rooms, and this particular location was killer, but it only had like 7 or 8 rooms. So he knew going in that it was a little bit small. And sure enough, as he built it out, he was turning people away. Well, as he built up his business, a Massage Envy opened up around the corner in the same plaza. So as he's telling people, hey, we're completely booked, he knows he's turning away the competition to Massage Envy, or he's turning the clients away. So he did the very risky thing of opening a second studio like 3/4 of a mile away from his other studio. And that one had the 15 rooms. But that's a very gutsy thing because you could say, well, are you going to cannibalize your other store? But no, because now he could say, look, we have another location just down the road. So we're fully booked here. But why don't we book you over in our other location? And then he went on to become one of the top franchisees, actually right in your area, in the Philadelphia area.
Really?
So,
that's awesome.
Again, on the outside looking in, you think, why would you want to go right where Massage Envy, your competition, is? But, think about it. Wherever you see the Golden Arches, what do you also see? The Burger King.
Right.
So there's
Supercut.
There are
Walmart.
people go when they think that, because there is a consumer for every brand. Not everybody likes this brand. Some people like this. Sometimes the experience isn't good for that person, but they're in that part of town and they jump over and they do the other one. So you have to come to business ownership with more of an abundant mindset that the world will expand in proportion to what we're giving out in the world. And if you are a good business owner and you're creating an experience that people want, the people will come, no matter how many locations of what you are offering are around you.
And be a good franchise owner. You can tell the difference with like one Best Western versus another, or one burger.
One Subway versus another.
Exactly.
Yes.
Hey, this has been awesome. Thank you so much for being here. How does somebody get a hold of you and start their franchise?
That's awesome. What I would say is go check out my YouTube channel, which is Kim Daly, my last name, Daly. You can just type in your browser, kimdaly.tv. I have nearly 500 videos at this point on all things franchising, business ownership, mindset coaching, being a top performer, failing in your franchise, financing your business. So you can get a little bit more knowledgeable about the whole space and kind of my take on it, my personality. And of course, all over my YouTube channel, there are links back to my website, contact forms, so that if you are ready to begin your journey, you can absolutely reach directly out to me. You will not work with a junior associate. You get Kim Daly herself. You might have to wait a week or two to get into my flow because I'm a busy girl, but I do promise you that I will reach right out to you right away, and we will get something scheduled and get you it worked into my calendar.
Love it. The info's in the show notes too. I'm a big proponent. I grew up in the franchise business. Get a hold of Kim. Kim, honor to have you. Thank you.
So honored to be here. I appreciate the opportunity.
Cheers.